No, thank you very much for the presentation, brother. I think it's been very informative. And maybe if I'll just jump into the first question, but I guess you've already answered the first question that I prepare is obviously what does the Export Credit Agency like ECIC do? So you basically briefed us up, and I guess the slide that you just presented to us will also be available on our website. And if people requested, we will also further share it with them. So maybe if I just
Yes, I can add that, you know, export credit agencies, many countries in the world have them, right? They are a vehicle to spur economic development by having exports to other countries. So it's still, many countries in Africa still don't have them, but they are slowly having them. They are a very important element to grow the economy by having exports out of that nation. So it's very, very, very key that when we became established in 2001, there was that push for that. In 1998, 99, thereabouts, when there was a need to start the Mozambique project in Mozambique, the IDC of South Africa financed that deal. We insured that loan, and that way it boosted economic development of the southern part of Mozambique, which Mozal is still a flagship project that they have in Mozambique. That project came into being precisely because you had an export credit agency that came into play. In other words, this is what we are here for.
Okay. Okay. No, that's very interesting. You know, obviously, I mean, if you put it in that perspective, that major projects such as Mozal needed such insurance or such facility for them to actually, you know, grow and for them to actually operate. You know, so that's a very interesting one. So the second question, maybe if I can just jump into it, is who's eligible to the ECIC cover? You know, I know you did touch on it, but if you can just also unpack it.
So what is important for your members is that, number one, the banks that will be advancing the loan, the 85%, registered in South Africa, would be eligible for ECIC cover. There are exporters that use their own balance sheet to finance their own contracts that they have won. They are also eligible, and we allow them to seed that policy to banks to free up their balance sheet. There are investors that make cross-border investments. When they do that, we give them cover. One of the big investments we have is MTN in Iran. MTN came to us some years ago to put $525 million into Iran. That was the investment we made. Investment do not require content, but the requirement is that the investor must have a South African balance sheet that they use to make the cross-border investments.
Okay, no, very interesting.
Investments in their own being can be shareholder loans, it can be equity, it can be pref mezzanine, any of that, yes.
Okay. And this could also, just another question on top of that one, even if the company, they've got their balance sheets here, they've got a setup in South Africa, but they're not necessarily South African, they don't originate from South Africa. Maybe they've got a partnership here, maybe it's a European company, there's a partnership in South Africa. Are they also eligible for these products?
Let me answer it like this. So you have one of them is Africa Infrastructure Investment Management out of Cape Town under Old Mutual. And then you also have the Pan-Africa Infrastructure Development Fund, PADIF, here in Johannesburg. These are fund managers that make cross-border investments. Most of the money that they use is not from South Africa. So they go and raise money through their funds elsewhere, but they use the South African balance sheet as a launch pad. So that qualifies.
Well, no, thank you very much for explaining what constitutes to South African content. So on the fifth question, maybe if I may ask is that, please elaborate on how South African cross-border investors may benefit from the ECIC's investment guarantee policy.
So political risk insurance is one that we provide cover. So let me start with the investment. So the investment guarantee policy is only up to 90% political risk insurance. There is no commercial risk insurance on the investment guarantee. The investor takes a commercial risk on their own. we only go up to 90% political risk insurance on the investment. On the export credit side, so for the lenders, we give them 100% political risk insurance on the 85% on the loan, and up to 95% commercial risk cover on the loan. There are specific instances where we go up to 100% commercial risk loan, but that's a standalone product, which I alluded to before, called small and medium transactions. So this is the cover we provide, and your members can just go through that presentation to see what is under political risk insurance, breach, confiscation, nationalization, and so on, and then commercial risk being protracted default or insolvency of the borrower while they are servicing the loan.
Okay. Can you maybe just slightly go back into, you mentioned small and medium transactions on that minimal threshold? What qualifies for small and medium transaction?
So small and medium transactions are now transactions under $20 million where the buyer is existing. They have a minimum 3-year track record, minimum 3-year audited financials. They've been in that business for long, and they procure goods from South Africa. We then appoint a third-party agent to do a credit analysis on that transaction, on the client cross-border. In that way, when they fulfill, you will see on the slides towards the end, we give the conditions which the foreign buyer must meet. When they fulfill those, we can then provide cover to the lender up to 100%. So the South African lender must have done an analysis to lend to that party on the back of the exports from South Africa. We just did a small and medium transaction out of Tanzania, a company called Camel Oil, which bought truck trailers and tankers from a South African exporter called GRW. The deal was around $10 million, and they used that to transport fuel and material in East Africa. So it fulfilled that, and Nedbank was the financier. So we have done something like that before, and there have been a few other small and medium transactions under that facility. Okay. So these are now not greenfields or brownfields projects, but clients buying exported equipment from South Africa to those countries.
Okay. No, interesting. And what constitutes, I know you touched on it, maybe you can just unpack it again, what constitutes to African products, African content, as you mentioned?
So now, if you have a deal of $100 million, right, you then will get the buyer to give you a payment as a contractor. Then the 85% will come from the bank to the exporter as well. So the exporter is made whole. They will not have non-payment challenges, because those challenges will be taken care of. What then happens is that in that 85%, you must meet a minimum of 50% South African content plus 20% host country, which is, let's say, Mozambique, 20% in Mozambique that you must fulfill. We put the 20% because many countries now have a localization requirement. So we are now adding that onto our requirement to make it smoother. But some projects are so complicated and sophisticated that the 20% cannot be found in the host country. Then we say any other African country. So if you meet 70% South African content, like this SMT in Tanzania we just discussed, then that's also fine. But in that content, it's whatever is put together in South Africa minus whatever is being imported. It includes the freight charges that go with it. It includes the salaries and wages that you pay in the factory when you put the goods together. It includes the premium, the Ecic premium, all the finance charges that go with it when you're putting the deal together, the fees that you pay to your auditors, your lawyers to calculate the premium, as well as your legal agreements, as well as the engineers that you deploy to go on site to do the work, as well as the fees, the profits and the fees that accrue while you're putting the contract together. Okay. And so all of that is the content calculation that you must make.
So I'm assuming the same principle applies to projects within Russia or America, whereby the 20% threshold applies there, where you need to source 50% South African content and 20% of that country. It's also countries, I mean, within Europe or elsewhere outside of Africa. So the same principle.
Outside Africa, the requirement is 70% South African content.
Okay. Okay.
Yeah.
Okay. No, interesting.
And South African content.
Okay. So maybe if I jump into the next one, Brother Paul, could you please elaborate on how the South African cross-border investors may, from the ECIC, invest in investment and guarantee policy?
So we are looking for that. We don't see enough of those. So for example, IGC made a cross-border investment into PPC Ethiopia. They made an investment into that and we gave them insurance cover. So investors are urged to come to us to say that whatever deal they have, even if it's already the investment is made and they seek political risk insurance cover up to 90%, we are here to look into those. And you know, and we've explained the spectrum. You know, it could be agriculture, oil and gas, energy, telecommunications, water, sanitation, all those sectors where you have put an investment in or you're about to make an investment into. Let us discuss with you. There could be some challenges because, you know, I think minimum we'd look at is about $100,000. Anything under $100,000 could be tricky, but if your investment is $100,000, you know, all the way to $2-3 billion, bring them to us. Let's discuss.
Okay. No, thank you very much. I think you've pretty much summed it all up. And for some of our viewers, maybe with more interest, could you also just share your website and your email address? I don't know if you are.
Okay. So yeah, our website is www.ecic.co.za. If you go to the presentation I've shared with you towards the end, you will have the contact numbers. So it's myself, Bia Baudouin, and Portia Dube. We are in business development, so those contact details are there on the presentation slides. So you can then just make contact with us for any project on the continent that you are pursuing, with the exceptions of those that we cannot look into, which are commodities. And we are not, you know, unfortunately, many of them call us when they need finance. We do not have a financing license. We cannot do loans or provide lending capabilities to anyone. We can only rely on the banks that are there to come to us to get that cover. So all that information we have shared, they can just look into that and make contact with us.
No, I think I've also slightly just jumped the gun here. A question just arose. There's a question I had prepared.
Yes.
Could you just inform maybe the viewers of the current opportunity? I know there's a few projects within Africa and within the proximity of South Africa. There's this LNG project within Mozambique. Could you just maybe unpack that one for us as to what kind of opportunities are there for enterprises wanting to plug into that space?
Right. So Mozambique at the moment, of course, is tropical. They are developing large liquefied natural gas projects in the north, in the province of Cabo Delgado. The one project which Total is developing is around, it's $20 billion plus, which is way more than Mozambique's combined GDP. In that figure of $20 billion, about $1 billion or $1.5 billion has been reserved for South African contractors. So that is what the figure ECIC is covering. So ECIC is covering about $1 billion, which is the banks of South Africa deploying money into that project. That implies that Total, through their EPC contractor called CCSJV, has to procure their goods and services from South Africa, which will go into that $1 billion, $1.5 billion. In that regard, ECIC has already had discussions with a few of the contractors that CCSJV is talking to, who they are bidding into the deal. And it's important for your clients to register on that CCS JV portal, put in their capability statements going forward, because the construction is going to go on for that site for about 60 months, 5 years. So there will be opportunities for South African contractors beyond the ones that have already been awarded work to do something in the project. But it goes beyond that, because this area in Mozambique at the moment is quite remote, and there will be supplemental projects that will need to happen in the town of Palma, near where the project is happening, as well as the infrastructure development that will go with it. So what I can tell to your members is that you will be having a 5-year rapid development that is not even near the scale of what you saw in Mozal in the south, which will be happening in Mozambique, which will be of benefit to many companies, which some of them are your members in that part of Mozambique. It will be good because then when CCS JV demonstrate to Total that they're meeting content, the banks can then sign off on more loans to go into the transaction.
Okay. No, I think it's very interesting what you're telling us. I mean, I not long ago met with the South African ambassador to Mozambique, Mr. Mandis Mpahla, and
Yes.
he told me about indirect projects which are bound to come about. Downstream industries. Something as simple as food source. As you were saying, as you alluded earlier, that it's a remote area, so they don't have the most basic infrastructure or the most basic services. Something as basic as food, and nutrition base, whereby something as basic as an egg. I mean, apparently there's going to be like 15,000 expatriates at initial stage of the project. 15,000, that is a lot. So what are these people doing? And services supporting them? I mean, medical services and the whole spectrum. So it's very interesting. That there's direct opportunities. There's also indirect opportunities that could come about. So
yes.
Yeah.
So it's very, very good. Of course, there are challenges, as you are all aware, with the security challenges that side, but it's being resolved as we speak. It's being resolved as we speak. So certainly it's a very, very big opportunity for South Africa and for South African contractors to go in there and make and get some work done in the interim.
But definitely, I guess that's where we also come about, with regards to companies wanting to tap into that space. We also strategic partners to ensure that risk is also mitigated and that they're well informed of the platforms in Mozambique. Hence, we've got a partnership there in Mozambique, that best informs of the status of the country and the affairs and so forth. So to working with the ECIC and also extending your products to some of our enterprises qualifying within that space, and it would be interesting, having them to tap into some of these projects through your products by reducing the risk. So we're looking forward to that. I'd like to thank you. And the viewers, and hopefully we can do this conversation in another time. But I'd like to thank you again, Brother Paul. Thank you for having some time to engage with us today.
Thank you very much. Thank you then.
Thanks, brother.
Thanks.